And with that, I will now introduce Laura Jones, our Executive Vice President and Chief Strategic Officer. Thank you, Laura.
Thank you, Alexa, and Happy New Year, everyone, or as some people are saying, welcome to Q5 of 2020. And the good news in welcoming you to Q5 of 2020 is that we still have the real 2021 to look forward to. This is our 37th weekly webinar, so welcome back to many of you who have joined us for a number of these webinars last year, and welcome to any new folks. The purpose of these webinars is to bring you updates, important updates on the programs, and we also sometimes have special guest speakers on, very topical items, which we have today. And so I'm joined today by my very capable colleague and partner in crime, Corinne Pullman, who's our Senior Vice President for National Affairs and Partnerships, and really an expert in all things Ottawa. She's regularly dealing with various federal departments and at the political level and also at the bureaucratic level. And we're fortunate to have both Brendan and Rachel with us today. And we have a special guest to introduce. So our special guest is Alan Rowell, and Alan is a longtime CFIB member who is also a tax specialist. And we know from many of the comments that we've had from all of you, you're interested in getting some tax advice, and it's a timely point in the year for that. So Alan, we're really grateful to you for joining us, and we're going to come back to you in a few minutes once we get through some of the regular content of the webinar, and we'll do a little special focus on the tax side, which I know people are very excited about. So if we go to the next slide, Reem. We've got our commitment to you, and many of you have seen this before, but for those of you who are new, we are updating our website regularly, and we're also, like many of you on your websites, always trying to make things a little bit easier to navigate, and I know we're changing the look and feel of a few things to try and make it a little bit easier to navigate, but it is a good source. Our COVID-19 Small Business Help Center is a good source, and we use the questions that we get from you on these webinars, as well as questions that we get through our helplines to update this very regularly. And of course, when there are government updates, we try and get those up as quickly as possible. And our helpline, and we'll put that number up a few times, but the helpline number there is 1-888-234-2232. So feel free to call us anytime with your questions. On the next slide, we have started these webinars, I think, right from the beginning with a few quotes. We just find this a nice way to start before we dive into some of the content. And so this week, Corinne pulled together some quotes, and I love the Martin Luther King one, Corinne. You don't have to see the whole staircase, just take the first step. I think that's brilliant, and also Buddha's pretty got it together there too. With no matter how hard the past, you can always begin again. Some nice thoughts to start the new year. Okay, and what are we doing today? We're condensing a little bit of our what's new, because there's not a lot new with the program since our last webinar, which was pre-holiday, but there is some updates that Corinne wants to share on the summer grants program. And of course, the biggest new news, unfortunately, is additional restrictions and closures in many provinces, particularly in Ontario and Quebec. So we'll just briefly touch on that, and then we'll get straight to Alan and your questions on taxes, and then we'll go to your questions. So Corinne, I think I'm pulling you up now to talk about what's new in the Canada Summer Jobs Program.
Yeah, thanks, Laura, and Happy New Year, everybody. And we're certainly glad to be back and hopefully provide you with some good information that will be helpful to you. The one new program is the Canada Summer Jobs Program, which is not new in and of itself, but they have made changes to it this year. So if you're a business that has relied on it in the past or is interested in potentially hiring a young person this year, there may be an opportunity through this particular program. They made a number of modifications to it this year to reflect some of the challenges as well. But first and foremost, it's important to know that applications are only open until January 29th. So there's only a couple weeks left to apply. But if you're successful, the program covers student wages between April 26th, and they've actually extended it out to February 22nd, 2022. Normally, it's only over the summer period. This year, they're allowing it to continue well into the fall and even into next winter. In fact, the youth doesn't have to even work over the summer. They can actually work in the fall or later in the year. The latest they can actually start is January, and it's a little bit odd to think we're in January 21 and they may start in January 22. But the point is that you can use this money to potentially hire somebody for more than just a summer break, but actually beyond that. And the nice thing is you can do it, you can also include part-time work. Normally you have to provide full-time work over the course of a summer. This program will temporarily allow you to actually hire people part-time and keep them up until February of next year. I mean, you can keep them longer. They'll cover their wages, which is the other point I'm going to get to, up until February of next year. They cover up to 75% a subsidy. Is that what it is? So they'll cover 75% of whatever the provincial or territorial minimum wage is for that particular jurisdiction. So they do cover more than normal. Usually it's only 50%. So they have increased the subsidy from 50 to 75%. They've lengthened the amount of time you can keep a young person, and you can now actually have that person work part-time as well as and/or full-time, up to you. They're also temporarily allowing you to make changes. So for example, if you apply by the end of January, but you don't actually bring that person on until say June or July, and in that time something has changed in your business operations due to COVID-19, you can actually make changes. You have to still get them approved by the government, but you can make changes because your business has been affected by COVID-19. Maybe the job description changed, maybe you have different hours that you want to provide to them. Those things can still happen. They just need to be going through the government once you have been approved for the actual subsidy. So on to the next slide. The second slide is really just where to get more information. So we wanted to make sure you're aware of it, given that the application window is only 2 more weeks. But there is information here, a link to that, as well as the applicant guide, as well as a link to the actual application form if you're interested. So we wanted to make sure that that was provided to you. To go to the next slide, we wanted to touch briefly, of course, on what's happening across the country right now. Business closures are becoming much more prevalent right across the country. This is really just a quick update on what we understand is happening everywhere in Canada. British Columbia has had limits on social gatherings, but really most businesses are still open in British Columbia, but at more limited capacity, similar in Saskatchewan in that regard, and similar in most parts of Atlantic Canada as well. Alberta has kept retail open at 15% capacity, but most other businesses remain closed, except for curbside pickup and delivery. Manitoba also, they're staying at critical levels. Essential businesses are basically the only ones allowed to stay open, and they've also put limits on the big box stores and what they can sell. They can only sell essential items. They're about the only jurisdiction doing that right now, which is quite different from Ontario, where we have just gone into a stay-at-home order that came effective basically at midnight last night, and that's effective across the entire province. All of the restrictions remain the same from what we talked about prior to Christmas, except now they're province-wide. So essentially, almost everything is shut down other than for essential items. Quebec too, they have sort of variations in terms of what's open and what's not open. But the big news there, of course, is they imposed a curfew. So there is an 8 p.m. to 5 a.m. curfew in Quebec, where people are not supposed to leave their homes. But other sort of restrictions on businesses haven't really changed from what was there prior to the holidays. So that's sort of an overview, and you can see it there, what's happening across the country. If you go to the next slide, what has happened too, we wanted to remind you, is there has been a few extensions on some provincial support programs, as well as the launch of one other program in one province. But we wanted to remind you that there are support programs out there at the provincial level as well, in addition to, of course, what is still available at the federal level, which we're happy to answer questions around: the wage subsidy, the rent subsidy, the CEWS extension as well. Those are all still out there. But as you can see here, here's some of the key there are others, not just these. You'll find more details on all of these also in the appendix to this particular handout, which is linked to the side of the webinar. The two I'm going to point out here are in Saskatchewan and Manitoba. Saskatchewan and Manitoba have extended their program. So in Saskatchewan, the Small Business Emergency Payment was also supposed to, well, it's supposed to expire January 31st. It looks like it's going to be extended or maybe extended. The bridge benefit in Manitoba was extended. It was supposed to end at the end of December. They've extended it now to January 31st. Ontario, we're still waiting for details. They're supposed to be putting out an Ontario Small Business Grant Program. We still haven't had any details on what it looks like. It's supposed to come out this month. So as soon as we do, for those of you in Ontario, we'll certainly share with you the details of how to access that. We go to the next slide. The only other one I wanted to point out here is New Brunswick. They've introduced a new program. It's going to be coming very shortly. It's going to provide up to $5,000 through Opportunities New Brunswick. So that one they just announced last week. They haven't had any grant programs in New Brunswick, so this is a new thing there. So those of you that may be from the New Brunswick, that program should be available shortly, and hopefully once it is, we'll certainly make sure you get that information. So those others have all been around for a while. So that's where we're at on that front. So of course we'll take questions at the end if you have any questions about any of that. But now I'm going to turn it over to our special guest, Alan Rowell. And Alan actually formed a company called The Accounting Place back in 1999, and then told us one of the first things he did was become a CFIB member. So thank you, Alan. That's great to hear. Since that time, he has done a lot of work trying to save small business owners literally hundreds of thousands of dollars in income taxes. He's had over 40 years of experience in translating taxation and financial services, and he really is really good at understanding how to bring tax language into plain English. Is something that we really appreciate at CFIB, because we know how important it is to make sure these really complex issues are in plain language. And he also is, I think, a real, he likes to dig deep and ask for clarification from CRA, something we also try to do on a day-to-day basis. So I think we have a lot in common, and like to challenge their position. Again, I think it's something the more folks that can do that, the better we all are. So with that, Alan, I'd like to turn it over to you, and you're going to walk us through a few slides around employer tax obligations. And I know many questions are already coming in, and we'll certainly get to them after we hear from Alan. Over to you, Alan.
Well, thanks, Corinne. Now you've scared me. You made me sound good. Yeah, with lots of questions coming in, now you really got me nervous. One of the things that I'd like to do before I get started here is I guess on behalf of myself and everyone else that's on this call, is a thanks to CFIB for what they do and how they do it. I look at it as being a resource center that's available to us. It's not available otherwise as a small business person. So what we're going to cover over the next 5 or 10 minutes or so will be what I'm calling the year of the acronyms. So we got CEWS, we got CERB, we got Siba, we got all kinds of things going on. And we want to look at what you'll need to know with regards to your business and all the different programs that are going on, and how they affect your taxes in your business operation. So we're going to cover off the wage subsidies. We're going to take a good look at the T4 slips and what the changes are there and how that affects your employees, what the reporting requirements are, and then we're going to take a look at the new working from home. A lot of us have had staff working from home during the year, and our new office and the home expenses are going to have an impact, and multiple questions probably from our employees as to what it is that they can actually do. Hopefully we can cover all that. Next slide, please. Okay, so the good news first. When we look at the CERB and we look at the student benefit programs that have come into effect during the year, and we've heard a lot about them, but the good news is that it has absolutely nothing to do with your business. You don't have to worry about it. If your employee has collected CERB or the student benefits, it's all immaterial to your business. And if they have an issue where they've collected it where they shouldn't have, that's going to be between them and CRA. Unfortunately, the CEWS and the rent subsidies and Siba are all going to impact your own personal or corporate reporting requirements. The wage subsidy that is coming through, we apply for it, every 4 weeks, I believe it is. And what ends up happening with the wage subsidy, some people are looking at this as being a reduction in their wages. And from a reporting requirement, that's not really what it is. It is income that comes in that is applied to your expenses, but it should be kept as a separate line item. The problem here that comes in with the CEWS is if you start to reuse it to reduce your wages, you're going to end up into a problem with CRA on your peer report, which is your pensionable and insurance earnings review that they do every year. So you want to keep it as a separate line item. From a tax perspective inside your business, this is going to reduce your expenses and therefore increase your profit or minimize your loss, depending on how you did this year. And that will have a tax effect. So all these things are taxable. The rent subsidy works exactly the same way, does exactly the same thing, and is a subsidy based on your rent. You run through the calculation, they send you the amount of money, deposit it to your bank account, treat it as a subsidy, not as a rent or reduction in rental expense. This will keep your continuity going, and it becomes taxable immediately. The Siba, we're going to cover that off in a little more detail in a minute. So if we can move to the next slide there. I want to talk about T4 slips for your employees because we have additional reporting requirements that are going to be required this year that we haven't seen before. And these come into what has to go into boxes 57, 58, 59, and 60. We know when we do our T4 slips for our employees, we end up box 14 is the one that has all the gross employment income. That's not going to change. But the change is that CRA and the Government of Canada wants to know how much money was paid in wages to the employees on certain dates. So you can see that box 57 covers that period from March 15th to May the 9th. Box 58, May the 10th to July the 4th, July 5th to August 29th, August 30th to September 26th. What that is being used for is CRA is going to be taking those numbers, the computer is going to be checking them back against your employees as to whether they collected CERB during those periods, and you also paid them, and they're also going to be using it to check against the numbers that you put in for your wage subsidies. So the purpose of it becomes the fact that they're looking at being able to automatically cross-check using the computer rather than an individual. So what ends up happening here is it becomes very important that your reporting is right. Otherwise, it's going to kick out, land on somebody's desk, and we know every small business person knows when it lands on somebody's desk, it results in a phone call, letters, and all kinds of wasted time. We would go to the next slide, please. I have here just kind of an example as to what it is that CRA is looking for and what they're asking for. And the misunderstanding or confusion at this point is wrapping around what is the pay periods. So a pay period of April 25th to May the 8th, okay, doesn't necessarily get paid to May the 14th. And when we look at the dates for our periods, box 58 requires the money earned from May the 10th to July the 4th. Question comes down to is when was that money actually earned? So CRA's requirement is that it goes into, in this case, box 58 because it was paid on May the 14th. So it's not the period that it was actually earned, it's the period that it was actually paid. One of the things that, I don't know, is it possible just to back up one slide? I don't know if that's possible. No, okay. We'll talk about it anyway. One of the things that we've worked on here is CERB payments that have come to people that are self-employed that maybe shouldn't have received that CERB payment. If they didn't meet that $50,000 or $5,000 wage thing for 2019, they've collected CERB, they've gotten all the letters that says we may or may not qualify. One of the things we've been working on here for our clients is the fact that the requirements are that $5,000 of employment income be charged to your corporation within 2019 or within the prior 12 months. So one of the things that can be done if you have collected CERB, you maybe don't qualify, is look at doing a payroll for January and February of 2020. It's going to require a T4 slip. It's going to require a late remittance, maybe on CPP deductions, depending on the amounts. But it's one of the ways that you could fall within the CERB requirements, but not be outside of the filing requirements. One of those things just to keep in mind. Talk to your tax professional, see if that makes any sense for you. Okay, next slide, please. Here we go, and the next one again because we backed up. Okay, so let's talk a little bit about CEBA. There's a language barrier inside of CEBA between what CRA is saying and what the legislation says and the way that people are hearing what's being said. So one of the things I want to talk about here is basically with the Siba loan itself. We all know that we can make the application, we can get a $40,000 loan, we know that it's interest-free, we know if we pay it back within the time frames of the agreement, $10,000 will be forgivable. The Siba Plus, very similar, $20,000, $10,000 coming back, repayment before December 31st, life is good. Now, here's where the confusion is coming in. CRA is telling people that the $10,000 becomes taxable when it is received, and that's correct. People are hearing that as the $10,000 becomes taxable on the day the loan is advanced into their bank account, and that's not correct. What ends up happening here is that $10,000 amounts or $20,000 amounts, depending on where it lands, becomes taxable on the day that the loan forgiveness is received. This is covered under Section 80 of the Income Tax Act. So what will end up happening if you had a Siba loan, you end up paying it back on December the 31st of 2021, you're going to pay back $30,000. The bank is going to process it through. The government is then going to forgive the $10,000, and that's when it becomes part of your income statement. It'll go into your profit and loss as a loan forgiveness entry and become taxable at that point. Okay, next slide, please. There's going to be some confusion with regards to the office and the home expenses. Okay, so it was a couple months ago, a month or so ago, the government came out with a simplified or a flat rate method for office and the home expenses. And this would be like currently in Ontario, we've gone into a stay-at-home lockdown. So what ends up happening is our staff will be working from home. They're going to be entitled to have a home and office expense deduction. What doesn't happen here is some of the details that are around that as to who claims what when. So I'd just like to cover that off. Those of you that have people that have worked from home in prior years, in 2019, it's normal for them to work from home, do not have an option. They do not get to use the new simplified or flat rate method. They are going to continue to need to use the detailed method, which means that as an employer, you're going to have to complete the form T2200. It would be everything that you always did. The individual or the taxpayer employee will have to make their claim based on an itemized and detailed claim, and it's all broken down by square footage of their house. The simplified method, the flat rate method that comes to $2 a day up to a maximum of $400, is available for people that are required to work from home in 2020 due to COVID. Okay, if they would not normally be working from home, that's the expense they can claim, $2 a day, 200 days for the year, $400 flat. The good news is there's absolutely no documentation required from anybody, whether it be the employer or the employee. They did put out a form called the T2200S, which is a simplified form of the regular one, but they're essentially saying that you don't have to issue them. If during their audits and reviews, they may come back at some point and ask for it at that time. But for everybody in general, no, not really necessary. The next slide, please. So just to wrap everything up before we open up for questions and give it back to Corinne, this year is going to be different than any other year. Your employees are going to be coming to you with questions because what they're hearing is that headline that says, I get to claim office and the home expenses, or I get $400. We want to avoid the pensionable and insurable earnings reports. We want to avoid audits and reviews from CRA on our businesses. So you really need to know what your requirements and obligations are now. You want to know what your options are. You want to know what benefits are available to you and your business. And when in doubt, always seek out a professional assistant. I remember hearing at one point, somebody asked me, or I'd seen the quote, and I don't have it right, and I can't tell you who it was accredited to, but basically it came down to that if you think a professional is expensive, wait till you try an amateur. And with that, I'd like to turn it back over to Corinne, and we'll make a good shot at trying to answer your questions here.
Thanks, Alan. We really appreciate it. I actually think, Laura, you're up next. So I'm going to, that's totally fine. Can we go to the next slide just so I'm sure? I'm pretty sure it's you, Laura. Oh, one more. I can speak to this too, I suppose.
Yeah, we can all stay up because there's just a little tiny bit of additional content, and then we can not be worried about that and just go all out on questions. So
no problem. Stay out of your way.
So we'll do that. So just, Corinne, I know you and your team have worked with CRA, so we've got a webinar coming up with them. And, you know, our intention with these webinars, this is probably a good time for us to talk about that, Corinne. Our intention with these webinars for Q5 of 2020, or the first part of 2021, is we're going to, as we've said to you guys before, we're going to keep them going as long as they're needed. And we've still got very robust attendance. So that's telling us they're, you know, that they're valuable. And we're going to look for having guests that will provide you with additional information. If any of you on the webinar have suggestions for us, please always feel free to give those to us, and we'll consider that. But we do have CRA confirmed. And Corinne, I don't know if there's anything else you want to add to that.
Yeah, just that there is actually a CRA doing its own webinar in which anybody can register for on the 27th, and then they're going to be a guest of ours on our weekly webinar on February 4th, also talking about tax obligations and what's happening. So if we don't get to your answers today or more answers pop up, there's going to be another opportunity in a couple of weeks.
Fantastic. So let's go to the next slide. So this is a tip we've been giving right from the beginning of our webinar series, keeping that log journal. I think I heard Alan say as well, just make sure you're documenting well what you're doing. And it's just, you know, we always think we're going to remember more than we actually do remember. So writing things down, and a great time, I'm reinforcing this tip because it's beginning of the year where people make resolutions. Great time to, you know, buy yourself a little journal if you don't have one already, and write down those things that you might forget to remember that are going to be important in case of an audit, or in case you need to defend some of your decision making and your thinking that went into that around COVID related issues, because it's just a little bit more complicated than normal times. We go to the next slide. This is where we'll get Alan to come back up, and we will take questions. But just a reminder that here's our helpline number, and we'll leave this up while we've got questions going. And Rachel and Brendan, I'll leave you to kind of answer some of the questions in the background, but we'll call you up as we need you. And then, but Corinne, I'll leave it to you to ask some questions to Alan, and then we'll all kind of pop in and out of the discussion as needed. But we'll focus mainly on the tax side now.
Okay. So thank you. And Alan, lots of questions, as you can imagine. I'll start with some easier ones, and then we'll jump into some of the more complex ones. But Lydia was asking, any assumption that assumption that if you didn't get any money from the rent subsidy until 2021, even though it is for 2020 rent, that this will not impact my taxes?
That's a great question. Okay, so here's my take on that. The government says, Canada Revenue says that we're supposed to do an accrual system accounting, which means that you would credit it actually to the period that it applies to. In this particular case, because there's subsidies, that won't become a reduction in your expenses or become taxable until such time as you actually receive it. So if you delayed everything and you applied for 4 or 5 months at a time, when you receive it, that's when it goes into your income statement. That's the period it becomes taxable.
Perfect. And Teresa was saying, so the T4 forms for 2020 are new forms? Question mark?
The T4 slips are a new form. Actually, they're not. They are the same form because a couple of years ago, they started leaving a bunch of blank boxes in the bottom of it. So the T4 slip itself is the same form. It's just new boxes that may be added into those blank spaces. The T2200 for the office and the home expenses does have the new form, the T2200S. They put the form out and then they decided that everybody didn't necessarily have to fill it out. So it's going to be there and it's going to be requested at the time that they do their computer cross checks and have something that maybe triggers and says somebody maybe collected CERB that shouldn't have, or there's a wage subsidy claim that doesn't quite match up against the total on the T4 slips, what's going on, then they may start asking for these two forms.
Right, very good, okay. Farouk has a really good question, Farouk, and it's probably more directed at CFIB than at you, Alan, but is there anything being done to try and get CRA to reduce the work and burden around T4 slips?
No.
Yes, he said this year seems a lot more detailed and difficult for small businesses that do this work on their own, and totally sympathize with you, Farouk. It's a challenge at the best of times, and doubly a challenge at these challenging times.
Well, Corinne,
yep.
First I'll turn it over to Alan, and then I'll make just a quick comment.
Yeah. Any comments on that, Alan?
Yeah, I was going to say the only real difference and the only real difficulty here is with reporting the new 4 boxes and breaking down those pay periods. Like I say, in our office, we started doing this for our clients back in the summer when we found out that this was going to become a requirement. And quite honestly, we got hung up on whether it's pay period or pay date also. I think you'll find that most software will allow you to sort that kind of stuff out relatively easy so you can get the numbers in there. The reconciliation is going to be a little bit different. The summary is going to be a little bit different. But CRA has never had a problem passing work along to us.
Yeah.
Yeah, just a quick comment on that is that's why CFIB does its annual Red Tape Awareness Week, which is coming up at the end of January. And so we are regularly fighting for plain language, keeping things simple, getting you straight answers, and keeping forms as simple as possible. But of course, that's an ongoing fight for us. Corinne, I wonder if I could throw a question in because I've got some here from you. One from William. I think you covered this, Alan, but it's kind of like drinking from a fire hose sometimes with all the information coming at business owners. So maybe you can repeat it. He's got a question related to the Siba loan. When do we need to recognize the loan forgiven portion as income? So if you could just cover that again, I think that'd be helpful.
And yeah, because this is a point of confusion. CRA is saying it's taxable when it's received, and the difference is when is it actually received. When it goes into your bank account, at that point it is still a loan, because if you don't pay it off, there is no forgiveness. The forgiven amount will come into tax when that amount is that loan is actually repaid and the $10,000 part is forgiven. That's the day it becomes income. That's Section 80 of the tax return, or of the Income Tax Act. I hope that answers it.
Yeah, and that's a bit different than what we had been saying. So I'm glad that you're clarifying that. It was, I think, a big source of confusion for a lot of folks. So that's something that we'll have to also make sure it's getting articulated clearly. I have a question here from Joe who says, "Hi, Alan, great to see you." So I think that they know who you are.
That means it's a loaded question.
Yes. So, they say they have an odd question. So they're saying a landlord granted rent relief for his tenants. Essentially, he said they didn't have to pay rent for 6 months, but then the unpaid rent would be spread out over the remainder of their leases. And the question is, how is this to be treated for tax, T2 purposes, as well as GST, HST?
Again, it comes back, and I'm going to assume that we're dealing with a corporation here, but this would be an accrual type thing. So your deferred rent or the rent holiday that they kind of had that is still payable in the future is actually going to be showing as a payable. Under the accrual system, it would be expensed as it was incurred, and the deferred portion that's being paid back later almost treated like a loan.
Right. Okay. I'm going to do a small little intervention in that I've had a few members correct me on some of the grant program information I gave earlier. So I just want to update folks. Apparently, the Alberta SME grant was increased to add another possible 15,000. So what we had on our chart and what's actually the case is actually become more generous. So thank you. I had a couple of members share that with us. For those folks in Alberta, there's actually a potential to get up to $20,000 now. And then Judy pointed out that Doug Ford announced yesterday that the portal opens tomorrow for the Ontario grants. So just again, for folks in Ontario, check out tomorrow. Hopefully there'll be some information there. So thank you, Judy, for sharing that. So it's, I think, important as Ontario goes into pretty serious lockdowns, know that portal becomes available for businesses that need it. So I just wanted to make sure I got that information out to folks. I know many folks are relying on some of those programs to help them through the next little while. So let's see here. So Jade is asking Alan, I've treated the wage subsidy, the CEWS wage subsidy received in the income section of the profit and loss statement. Does this matter as opposed to treating it as an expense reduction?
At the end of the day, no, it doesn't, because your tax return, as we've all learned, works off of net income, not your actual gross income. So the reason I suggested to go in as a credit and a subsidy as a special or a new line on your profit and loss statement is simply so that you can do your comparatives. If you can't compare year over year, because your wages for 2020 are, $20,000 or $50,000 less than every other year, it's going to distort your statements from a management point of view. So that's why I suggest to go down as a separate item, an extraordinary item, if you want to call it that, and shown for the year that it applies for, unless this is going to continue for another 5 or 10 years.
Hopefully not. Hopefully not.
Let's hope not.
Dennis is asking, will the T4 summary balance to the T4 slips? So do we need to add the subsidy received to balance the T4 summary?
Okay, I'm sorry, you broke up a little bit there, Corinne.
Okay, let's say that again. So Dennis is asking, will the T4 summary balance to the T4 slips? Do we need to add the subsidy received to balance the T4 summary? Okay,
great question. No, the answer to that is no. The difference here is that the CEWS subsidy has nothing to do with the employees. Okay, they still got paid X number of dollars. Their T4 slips are going to be exactly the same as any other year, with the exception of the addition of the 4 new boxes. When you balance it off, or the deal with the CEWS is between the government and the business. And that's why the business takes that reduction in their expenses.
Right. Okay. So we have Janine asking, if box 57 to 60 on the T4 is to be populated based on date paid, how could this be cross-checked against the CEWS or the wage subsidy, which is based on the date earned, not paid?
Yeah, I know. Beautiful, eh? This is government operations at work. And you're absolutely right. And those periods are 6-week periods, whereas the CEWS is a 4-week period. How they're going to do it, I don't know. I have enough trouble with my own business and my clients' businesses trying to figure out what CRA is actually trying to do. That's not an answer. It says, hey.
No, but I think you made the point earlier, just before we went live on the webinar, Ellen, and I think it's a good point that, as government are working through these programs, we kind of assume sometimes that they're logical and it all makes sense, and there must be some why that actually where the dots line up, and that's not always the case. I mean, these are fallible individuals who are putting together the programs and trying to execute them, and sometimes there are things that just don't, I forgot the word you used for it, but little bumps and kinks, I think was the word you used, that just don't necessarily make sense.
Yeah, and that's exactly right. And it's easy, and it's easy to complain. It's easy to get frustrated, but for the most part, in my opinion, anyway, the government did a fairly good job of getting these programs in place quickly, so that we didn't know what was happening, and the fallout from it now, and those little kinks that fall into play are popping up now.
Yeah.
What we'll deal with them, same as that we always do.
Yeah, and that's certainly true for the programs and some of the things that they didn't think about that Corinne and I are continuing to advocate on, whether it's there. We had a question earlier from somebody about the non-arm's length issue with the rent subsidy, and we keep working on all of the issues that are coming up that we're bringing to government, but it's kind of almost as these programs are announced, then the kinks or the problems become obvious, and then we have to go back and try and smooth out those kinks. I've got a quick one I'll throw in. Peter is saying, do you know whether accounting software like QuickBooks will automatically populate columns 57 through 60? And Catherine chimed in that QuickBooks sent an email saying they're doing an update to auto-populate the extra T4 codes available early February. So that may be helpful for some people. And Alan, I don't know if you have anything else to add to that.
No, we got that same notification. So the difference there is it's a matter of waiting until that update comes through to let the software look after it for you. Again, going back to what we were just talking about, Laura, QuickBooks, yes, they'll update that software. Yes, it'll do it for us. People, please get out a pencil and a calculator and check it, because software does exactly what it's told, and it's being put together again as a special item relatively quickly. So we can wait, but check it.
Yeah, okay. Good advice.
Okay. So I'm getting quite a few sort of folks talking about the Siba and when to pay it back and how they've been told differently. So I think that is one. So I have a couple questions around that I want to see if we can help. We can help some folks with how to deal with this. So I'm just sorry, I just lost that one question I was going to go. Okay, here we go. So one question Joe is asking again, so the person that seems to know you, what about corporations who've already included the $10,000 in income for their fiscal year because they were told that taxable instantly under different sections of the ITA? So, and that's similar to somebody else who's asking that they were told differently, and can you provide the exact area in the Income Tax Act that says that they should do it when it's only? So I think that there's some confusion. So
I can look that up. It is Section 80 of the Income Tax Act. I believe it's 80. I'm going to take a guess here, but 80 bracket 115 is what comes to my mind. But I can look that up for you. That's not an issue. If we did it now, we'd use up the next 15 minutes. So I can get that for you, and we'll cross-check what I'm understanding. Again, it was with some other people, but my understanding is a loan is not forgiven until such time as it's actually forgiven, and that's when it becomes taxable. And I'll look up that section.
Yeah, and I think is Rachel? Rachel, are you available? Because I know you had also spoken to CRA about this, so I just want to, we have to sort of be mindful of that we're giving the right information. I just want to make sure.
Yeah, I too am getting quite a few questions on that. Susan was asking whether there can be clarification on Siba and Susan understanding CRA to say the 10,000 forgivable portion was taxable in the year that the cash is received rather than the year it's forgiven. So there still seems to be a fair amount of confusion on this point.
And Rachel, I know you've talked to CRA to try to get clarification. And what was your understanding of CRA directly on this?
So it seems that I think we should probably get some more clarification. We do have some things that are referring to the Income Tax Act that Alan is referring to as well. And when we talk about a loan, loans themselves are not supposed to be taxed like Alan said. It's more that forgivable portion. But there are some nuances there, to be quite honest. So I know we've talked about how income tax rules often have the answer of it depends. But from what I understand, the answer is it depends right now.
That's not a very satisfying answer.
It's not a satisfying answer for anybody because yes, we'd like everybody would like to have it, nicely documented. I think Rachel, we can work on that, and I'll help you with that, and we'll get a definitive answer.
Yeah, and then we'll certainly get it out to folks in writing, so you have something to sort of share why it was interpreted this way by Alan and or by us as an organization. So, okay.
Maybe the number 1 question we put to CRA on a long list of questions that we have for them.
Yeah. I'm just gonna quickly touch on, Stephen was asking for the Siba repayment, do they have to repay the full loan amount and then they get the 10,000, or do they not have to repay the 10,000 as well? And I think, Stephen, our understanding is you just have to pay the amount that's the loan and not the amount that's forgivable if you pay it by the end of 2022. So for $40,000, you'll have to pay $30,000. Same with the 20, you'll have to pay the 10. You don't have to pay the whole thing. Okay, go ahead, Laura.
Can I throw one at you? Alan, you might also have some insight on this, but one from Kent. Do we know when new guidance is coming out around the criteria to qualify for CEWS and CERS in 2021? Do we have any new intelligence on that, or are we still, is that one of our outstanding questions?
Sorry, for 20. So we do know from January to March now. So that one has been announced. So parts, we do have that piece. So that's been announced, that's been up on the website. Essentially not much change with either program. Essentially the rent subsidy continues as it was at the end up until December. And the wage subsidy, they made a slight change to it in that if you have a revenue loss of more than 50%, you may be eligible to get a little bit higher subsidy of up to 75% now. But if it's less than 50% your revenue loss, nothing really changes. So,
but post-March, we don't have any updates yet for how they're going to deal with March.
No, nothing post-March, which you can kind of understand. I think the government wants to sort of see what happens with the pandemic and closures. If I think things are still as difficult as they are right now, I suspect they'll keep the wage subsidy fairly high. If things seem to be improving, then they might start lowering it. Those are some of the things I think they're trying to take into account. And I think it's a little unpredictable right now. And I know it's hard to balance because you want some predictability of what will come in those months, but I think it'll probably be, I suspect, at least another month before we're going to have any information on that. That would be my sense. All right. Susan, I'll go back to you. Alan was asking about the T4 extra boxes. We do monthly pay periods. Do I separate out the amounts paid from March 15th to March 31st from my total March payroll?
No, you would report based on the pay date of it that you paid. You don't have to break it out into the weekly periods. If you do a monthly payroll and it overlaps a period, it's the date that month is paid, it would go in the box that applies for that day.
Okay. Yes. Oh, Rachel.
Okay, so I just went into my emails and looked at what we had received from the CRA most recently about the Siba. And what they say is yes and no. Only the amount of the loan that was forgiven in the year it was received is taxable in the year that the Siba or Siba expansion was received. You can declare your forgivable loan portion to the CRA in one of two ways. One, as revenue in your tax return. You can elect to include the forgivable loan amount in the business income of the year in which the Siba loan is received, or as a business expense, reduce the deduction for your business expense by the amount of the forgivable loan portion. And I'll kind of defer to Alan if he can better explain that.
Well, okay. Based on that explanation, it almost sounds like they're going to give you the choice. Okay, so legislation says it's not forgiven till it's forgiven. I mean, because if you don't repay it, it remains a full loan at 40 grand. There are businesses out there that took the $40,000 loan, don't really need it, but a 25% return that costs zero is pretty good. And the loan will get repaid and the 10 grand will be forgiven. So it almost sounds like they're giving you the choice. Now, when you look at that from a tax perspective, if in 2019 or in 2020 you're actually losing money, maybe it makes sense to take that $10,000 into income then instead of in 2022. The problem doing it like that is we can't go back and change our mind in 2022. So it becomes a bit of a catch-22 there. But Rachel, from what you just read there, that sounds like they're giving you the choice. And
would you not also think that it depends on when it's recognized as a forgivable loan as well? Because...
But that's my point. It's not recognized as forgivable until you've satisfied the conditions, which means repaid it, and that's when it becomes taxable. That's the legislation. What you just read there sounds like an option, and it may make sense.
I know from our conversations, Corinne, with the EDC, the EDC hasn't really given much guidelines as to how repayment works with the financial institutions. So they kind of just let the financial institutions decide some of those terms. So maybe that's something for consideration when we talk to them.
Yeah. And Zoe just pointed out that the BC CPA says Siba forgivable portion is indeed reported when received per section 12(1) of the Act, contrary to what you're saying. So let's obviously let's try to get some clarity around this, and maybe next week's webinar we can try to come back with a bit more clear. Is it an option? Is it a definitive? Those are some of the things that I think we'll try and make sure we can get some clarity around, so people can feel a bit more secure.
And as often the case with this, often, when you've got, people who are really working hard to understand these, including, the folks on this call, and there's different answers, it's because CRA itself is not being very clear on things. And so the legislation may have clarity, but if they're interpreting that different, that creates a lot of confusion. So, obviously our apologies for not having a clear answer, and we will work to get you one, because it's important, and we know people are doing their taxes now and need answers to this question. So we'll work on that, as Corinne said, for the next webinar.
Yeah.
Corinne, are there other things we want to address quickly besides taxes? I do have one on rent that I'll quickly knock off. Sarah was asking if there a change in the rent subsidy for small business that have a business account and a holdco, build an opco and a holdco structure. The answer to that, unfortunately, right now is no. We've got that letter that we have out to the finance minister with, we've raised, I think it's 7 different issues that we've kinks, as we're now calling them, Alan, with the program, including that one. But I will alert people to some good news on this front, which is finance. I did a media interview yesterday with CBC, and the CBC was saying that, oh, well, when we contacted the finance minister's office about this very issue, and it's actually good news that the media is asking questions of the finance minister's office about an issue that's as sort of more technical and complicated like this, that will help us, you know, sort of run it up the flagpole even more, put more pressure on finance. So thank you to all of you who are getting us your stories on this. It's helpful, and we're going to continue to put pressure on. We know that's a big challenge. Are there any on your end, Corinne, you want to address with the programs?
No, mine are mostly on the tax side, but I do have another tax issue I'd like to run by Alan, which you didn't bring up, but I know is coming up more and more, and it has to do with the 10% wage subsidy and the PD 27 form. So Sigal's asking about it. I also have another person saying, you know, how do you report the 10% subsidy on the T4 summary? So anything that you can help with on that front, I think will be, I know, Rachel, you're getting this question a lot too on the phones. So I think that's another area that has to be touched on.
Yeah, and I think what is happening there is the 10% portion will be treated exactly the same as the CEWS portion. Okay, it has nothing to do with the employee. It has nothing to do with the T4 slip, because it's a rebate or a reduction in expenses paid by the government directly to the corporation or to the employer. So the 10% is a reduction, a subsidy, a reduction in your costs, just exactly the same as CEWS. It's not going to result on the T4 slip or the T4 summaries or anywhere, I don't believe. You know, this is only January the 10th, and T4 summaries and that kind of stuff aren't being dealt with yet, but I don't see that coming up. Was it PD7? PD 27.
And there are people asking about whether, even if they didn't claim it, do they still have to file the form? And my understanding is they do if they were eligible, even if they didn't claim it. That's my understanding as well. And that's, do you know, Alan?
Haven't run across that one yet.
Okay, okay. That is something I think that we were looking into ourselves. So Jeff, I know that's a bit of your question around, we didn't claim the subsidies, do we have to file the form? And it has to be done by end of January. But Rachel, I think you've been trying to deal with that question too, right?
Yeah, actually, the CRA does have a webinar about the 10% wage subsidy that you guys can check out on their website, and it does address the fact that anyone who's eligible for the 10% wage subsidy is supposed to fill out this PD 27 form. We've been getting a lot of feedback about how that's difficult, but do let us know, continue to give us that feedback. If I may, I did have one question that I saw that might be good to share. A few of you have been asking me about whether the CEWS applications will be open for amendments or changes soon. And it turns out that the CRA is planning to do this or make this feature available at the beginning of or during February. So just a thought that I should throw in there.
Thanks, Rachel. And I just want to let attendees know that we typically go, for those of you who may be new, we typically go just a little bit over when we have a lot of questions, as we do today. But obviously the schedule, we're skating close to the scheduled time. So I just wanted to say that we'll probably be another 5 minutes-ish, and then we'll wrap things up. But I do have, I think there are still a few last questions, Corinne, that we probably want to squeeze in to get to as many as possible. And Colleen has an interesting one. Any recommendations for businesses puzzling over taking the Siba top up? We don't want to take on more debt, but we also don't know what the future holds as we move further into the second wave of COVID. And I think a lot of businesses struggled with this. Even the first Siba loan, we had a lot of people say, I'm not sure whether I'm going to need it, and do I take it? Do I not take it? What do I do given the uncertainty? Alan, what are you telling your clients? What are you advising your clients?
You know, from a business advisory point of view, we tell our clients that if you qualify for it, you take it. Now, if you take that $20,000 and you stick it into a GIC or something for the next year, that's fine. The problem we found with small businesses, and this will ring a bell with everybody, is you can always get money when you don't need it. It's when you need it, things start to become tougher. So cash is kind of king. If you're going to be able to qualify and get that loan and tuck it away, our advice to our clients is you take it, and we'll pay it back later, even whether we use it or not.
Yeah, I think that's a good advice. I mean, earlier in the pandemic, I think on a very early webinar when we didn't know how long this was going to last, we sort of said, look, take what you need, and we'll all be okay if we take what you need and don't do more. But given the uncertainty, I think your advice is very good, Alan. Solid advice, because we just don't know, and it is harder to get when you need it than when you don't.
Yeah.
Yeah, unfortunately. May have already answered this because I was answering some questions as well, but Erica's asking, and I noticed a few other questions on what if I've already submitted my T4s by date of pay period? What if you've already submitted things and you've done it not according to what CRA is or what you've advised?
For first off, if you've submitted your T4 slips on July the 12th, congratulations to you. But I would file amended slips.
Okay, so Erica, hopefully that answers your question. Corinne, are there more that you want to throw in just as we look at wrapping up? I have tons here.
I know it's hard to get through them all. Jocelyn had a quick question around the Canada Summer Jobs Program, and I'll don't know if we have the answer for you right now, Jocelyn, but we'll try and get it for you. But she's saying that for the Canada Summer Jobs Program, can you share the subsidy between two part-time employees? Or does it have to be for the same employee for the entire period requested? My thinking is that when you apply for it, and I have to sort of look to my colleagues in business resources who may know more about this than I do, so I may be calling on Brendan or Rachel for some help on this one, but my sense is you're applying for a position, and so if it's a part-time position or you need two part-time positions, that's what you apply for, is two part-time positions. But Rachel or Brendan, I don't know if you can hear us and you'd be willing to pop up and give us your thoughts on how that might work on the Summer Jobs Program.
Yeah, I would say your understanding is pretty good, Corinne, and especially considering this year you are allowed to apply for part-time employees. It'll be even more accessible for businesses who are using this for this reason. So yeah, it would be.
Okay,
So
thank you.
So I've got one question I committed to Charlene that I would try and pose, and maybe we can, is what you're discussing, how relevant is it to nonprofits, as well as are the rules roughly the same, or is, and I don't go into details on that, but Charlene is asking, wondering if you would discuss how this pertains to nonprofits, and maybe just flagging for Charlene where there might be some big differences in what you, the information you provided.
Yeah, from my perspective, the nonprofit business or nonprofit corporations, all the reporting remains the same. There's just not going to be an income tax application to it. Now, if the not-for-profit is a charitable registration, that may change things a little bit because their reporting is much more difficult, much more involved as to where they're actually spending money. But for a nonprofit organization itself, no big issues. Reporting will be the same. Tax impacts are immaterial.
Great. Well, Corinne, I think I'm going to go to you for any final questions, and then we'll do our wrap up.
Yeah, just a quick one on the wage subsidy and the rent subsidy. There, Marianne was asking, is the January-February 20 revenue criteria still being the comparison for January 21 and February 21 for CEWS and CERS? So the one other small change that was made for January to March period for both CEWS and CERS is that your revenue comparison, if you do the year over year, is moved back a month. So for January, you can use November or December as for your revenue loss comparisons. And then for February, it'll be December, January compared to January of 2020. So they did slightly change it. So it's the same sort of revenue loss comparisons that you used for the month of December that you're going to be using for your period 11 or the month of January. So I hope that makes sense. So that's one thing I want to clarify as well. That's another slight change that they made to the rules around the CEWS program for the January to March period.
So, Alan, here's a really nice one for you as we thank you for your for joining us today. Lots of comments about how clear your presentation was and how and thanks for having you on from participants. But here's one from Lisa. Where are you located and are you taking new clients? So that's always that's the ultimate compliment, right? So
and thank you very much, Lisa. The reality is we're located in Stony Creek, which is just really next door to Hamilton in Ontario. We do run clients right across the country, so we, from one location, everything is done virtually, or a lot of it is done virtually. So we go from British Columbia to the East Coast. We have clients in California and in Florida. So North America right across, and we are set up to do everything virtually at this point. So.
And are you taking?
I'd appreciate to hear from you, Lisa.
Yeah, okay, so it sounds like, Lisa, if you're interested, and do we have Alan's contact information on the webinar slides?
Doesn't look like it, so perhaps it's something we can provide.
Google the accounting place.
Okay, Google, yeah, Google, that's right. What am I thinking? We're in, you know, I'm showing that I'm a Gen Xer and not a millennial here. Just Google it, right? So yeah.
So Google the accounting place.
Yeah, the accounting place. You're going to find us. We're at Stony Creek. No problems.
Yeah, but you're getting compliments from accountant members too, who are on the webinar, saying that what you provided was very helpful. So, Alan,
well, thank you.
Start our wrap up by saying a huge thank you to you. I know for our participants, we got to as many questions as we could today. We didn't get to all of the questions, but as you know, we use your questions for our FAQs, and we also look carefully at them. And some of the ones that we haven't been able to answer, we use them for our webinars, you know, coming up. And the big outstanding one is, of course, the Siba piece, and we will look to get some clarity around that, some better answers around that for our next webinar, as Corinne mentioned. And Alan, typically at this point, we just each say a few wrap-up comments, and so maybe I'll go to Corinne first, and then I'll go to you, Alan, and then I'll wrap it up, and we'll close out the webinar. So Corinne, over to you first.
Thank you also, Alan. I wanted to extend my thanks to you as well for joining us here today. And thanks to all of you who have joined us on this webinar once again. We really appreciate you taking the time every week to join us, and hopefully we continue to provide you with good information. As Laura said, you know, I always feel terrible at the end of these that we can never get to all the questions, and there's so many of them, but we do read them all, and we do use them in the course of our own work, and my own work in particular, where it allows us to go to government and ask these questions. And today, CRA is a big target of many of these questions. So thank you. So continue to do that. I also encourage you to call our business resources. Rachel and Brendan and their colleagues across the country are more than happy to try to answer your questions if you feel like we didn't get to it. And some of you have pretty detailed questions. You may want to consider that. And certainly we can also reach out to Alan every once in a while to try to get some answers where needed. So it's the beginning of a new year. I know, Laura, you like to call it Q5 of 2020, given it hasn't started out so very well. But please know we're still here. We're coming back every week. We're going to continue to fight for you guys and make sure that we get the changes that are necessary to make this a little less challenging. And I know it's tough, so please know that we're here to help, and call us if you need us. See you next week.
Thanks, Corinne. And Alan, did you want to make any final comments for our participants?
I'd like to just make a comment to all the small businesses and business people that are on the call here. One of the things that we find, and when, you know, we chose to become self-employed, we made that decision, and sometimes it doesn't look like a good idea, and it's very easy to get up in the morning and go, oh, what did they change now? You know, the reality is that we're all going to get through this. All we need to do is get up every morning, get your chin up high, one step at a time, 1 foot in front of the other, and we'll all be through it. No problems.
Thanks, Alan. I think that's a great note to start the new year on, and it harkens back to one of those quotes that we had that just, you know, it's one stair, one step at a time. Don't take the whole staircase. Just, you know, kind of sometimes the biggest triumph is just getting up and doing it again, right? And keeping on with the keeping on. And so I too want to echo Corinne's comments as well, that Happy New Year. And I know it feels more like Q5 of 2020. I can't wait to say a real, I'm going to say happy 2021 once we're, you know, we've turned the corner on this. And I look forward to that webinar when we are doing that. In the meantime, I've been so impressed with small businesses across Canada and how they put their best foot forward for others and for their communities, even while struggling with incredible stress, the incredible stress of what's going on. So I echo Alan's comment, just keep on keeping on, and one day at a time, one step at a time, and we're going to get through this. And with that, we're going to call this webinar to a close, and we look forward to seeing as many of you as want to join us again next week. And again, a huge thank you to you, Alan, for doing a great job of keeping things as simple and plain language as possible, given the topic area. So
yeah, we tried.
Thank you to my other colleagues, and thanks to all of you who joined us today. And we look forward to seeing you again. And with that, Alexa will end the webinar.